Welcome, everybody. Thank you for taking the time out to come and meet with us tonight for the step-by-step guide on building your real estate empire in the US from Canada. Um, I'm here hosting this tonight with a few experts in the industry. So we've got Erwin from Share and we've got Kelly from MoneyCorp. So we're going to dive in. I know it just started, but we're going to get started. This is recording, so if you're coming late or whatever, you'll be able to view the recording after. But we're going to dive into value everybody's time and really show everybody here how easy it is to invest in the States. So ultimately, it starts with the financing. So Lend City is a one-stop shop. So we're a U.S. mortgage brokerage, um, also a Canadian mortgage broker. We do residential, commercial, land, construction. The cool thing is that we can coordinate deals on both sides of the border, which just allows smoother transactions. Now, we get a lot of questions like, how hard is the financing, right? And it's not hard at all. It's super, super easy. So no income is needed to tap into US financing. You don't need a credit score. It will help you if you have one, and I'll touch on that in a second. But down payments start with 25% down. You can do unlimited rental property purchases. There's no caps, there's no debt ratios like there is in Canada. And the lenders just keep going and going and going. And the approvals are based on the property's cash flow. Now, if you do have a credit score, which will happen over time as you start investing into the States, you can start to tap into a little bit lower of interest rates, because how it works over there is the lenders, they price the loan based on the risk of the file. So the higher your credit score, the lower the risk, and you get a slightly lower rate. It's not a big difference. Could be 1/4% to 0.5%, but it can make a difference. So just know those are some options. Okay. Applying is super easy. You need a passport. And the main reason for this is they're looking for certain countries that are on the sanction list, right? They want to avoid lending to certain foreign nationals, they call them. So the passport shows your country of citizenship. Ideally, you want to have an entity set up. We can close without one, but I'm going to say 9.5 out of 10 investors close with an entity. So we need the documents to see who the beneficial owners are, how it's registered. Is it a multi-tier or a single entity, right? We need to know the whole structure because certain lenders have different requirements for this. We do need the lender's application as well, which will get you that. And I'll touch on that in a second, but ultimately, we don't want to just send you an application and then that's not the lender you're working with. We want to shop to find you the best deal and then introduce you to the lender. And in the States, it's very easy. They just need 60 days worth, so 2 months of bank statements showing your down payment. That's it. So Canada is traditionally 90 days, but we still have the same scrutiny in the fact of they want to know where your funds are from. So if you are providing 2 months worth of bank statements, but 2 weeks ago a 50 grand deposit hit your bank account, we do need to show the proof of those funds. With most of the lenders over there, we do have a couple that don't check the source of funds, but most of them do, right? So we got to keep that in mind. We need the source of those funds. Okay. So costs, what you can expect. So we always suggest people to factor in 4% of the purchase price as a closing cost. So in the States, it's a little different. They use title companies and, there is closing costs there. Now, a title company is the equivalent of a lawyer here. In different states have different rules, like New York, for an example. You can only use a lawyer. They won't use a title company. But the role is very similar. So that's what they do. Whether there's broker fees in the loan. So we can, for our commissions, we can build it into the interest rate of the loan, or you can pay it as a hard cost on closing. So we're flexible that way. I have personally found it's better to pay the fees once, especially if this is a long-term property, right? Just pay the fee and get the better rate. it's usually cheaper. If it's a flip or whatever, maybe you want to build it in, but if it's a long-term hold, it makes sense. The lenders have an underwriting fee as well. And again, all of this I'm including in the 4% of the purchase price. So this is the time it takes for them, the lender, to review the file, analyze the property's income and expenses, and determine the max leverage they're willing to do for you. Some of the lenders have an origination fee. We do try to work with the lenders that don't, so it's like a lender fee essentially. And the fees are also higher as a percentage if the loan is small. So if you're buying, two, $300,000, $400,000 property, the fees as a whole or as a percentage will be lower than if it's, $100,000 to $150,000 property. Pros and cons of, each asset class, but the fees are a little cheaper as you go up. Okay, so rates. We're seeing rates 6 to 7.5. I've even seen some on larger apartment buildings in the 5s. So it is a little bit more than Canada. So keep that in mind. However, the loans are open after 5 years. So that means you can refinance penalty free, where Canada, right, you have a term. And when that term is done, you have to renew into another term. So anytime you break in the middle of a term, you have a large penalty. So over there, they don't, right? You just have the penalty in the first 5 years, and then it's a fully open loan. Okay. Now I did state there that rates can be as low as 5.74 with a buy down. So a buy down means you're prepaying some of the lender's profits, and that allows you to secure a lower rate. Okay, so we can do interest-only loans, and we can even do a 40-year amortization to maximize the cash flow of the property. And all of our lenders that we work with do work with foreign buyers. So that's important because if you just call up any US mortgage broker, they might only have a handful of lenders that work with foreign buyers, where all of our lenders do, which really allow us to shop around to get you the best deal. Okay, so process. What's the process? So pretty much book a strategy call. So I put the link up at the bottom. Do that. You can pick what type of investment you want to buy, whether it's commercial or residential, right? And through the strategy call, you'll be able to sit down with somebody on my team and discuss the property, get quoted on the rates, and everything that you need to be able to make an educated decision on if this investment makes sense for you to move forward. There's no obligation at this point. It's literally just a phone call, learning what the rates are and the options are. Okay, so say that goes really well. Then what you do is you submit the property details to us. So this is, address, potential purchase price, any of the income and expense details relating to the property. And then we can tell you the maximum leverage on that property, the rate. Ironically, like we had this one client, one of our first deals that we did, and he refinanced 2 condos, but they were in separate complexes across the street, and the rate was 0.5% difference between the two. And after we dug and did some research, we uncovered that on the one side of the street, it was zoned, or not zoned, but it was deemed a bit of a flood zone area, slightly higher risk than the other side. So the rate was different, even if same property, same layout, same value, right? So it's very different property by property. So we like to price the properties individually so you know exactly what you're getting. Next step would be to set up a USA-based entity and bank account. There's some advanced structures which have some Canadian ownership at the top. We can do all those unique structures, but the more advanced your entity is, the less lenders that are available to you. So you want to keep that in mind. But obviously you want to speak to your accountant, an expert. Erwin from Share will touch on some of what they do as well to help get you set up. Then you want to partner with an expert to find your properties, right? Whether that is a realtor or, again, Share. That's why they're here, right? So we're going to show you what they do. But you want to partner with somebody to find your properties, right? Because then you want to buy something, especially someone who has experience working with a Canadian, because your needs are going to be different than a US citizen's needs. They don't understand the differences. They don't understand the foreign exchange, right? And that's why we have Kelly on here to talk about some of the money aspect of things. They just don't get it all. So you do want to have those experts on your team. And then lastly, close the deal, right? So you want to, take possession of the property and move on. Okay, so lastly, I just want to touch on some benefits of using Lend City. So all of our lenders are designed for foreign buyers. So that's very important because, again, that means we have options for you, right? Calling someone who doesn't understand foreign buyers, they're not going to have those options. We're investors too, and we don't live in our mom's basement. I am in a basement, but it's my own basement. So I think that's important because everybody in today's world can do anything, right? You'll see people online and if they're not investing and they're not doing these things, how can you get the proper advice? So that's what I really like about our team. We also do all the processing in-house, which saves you additional money. So we've seen a lot of brokers and a lot of lenders hire third-party processing companies. And it does speed up the loan process. But because it's external, there's additional fees for you, where we do this internally. So it does help you save on your fees. Your loyalty is rewarded with lower costs and fees as you build your portfolio. We have, and we will continue to do so, where we make custom deals for you as far as our commissions and stuff is concerned, depending on your business that you do with us. And again, I touched on this one earlier, but US brokers have limited options for Canadians. Okay, so that's at high level. Now, what I'm going to do, I'm going to go to Kelly, but before I do, I'm just seeing if there's any questions. No, there's not. Now, if you do have any questions, you can place them in the chat. If you hit the chat bubble, it's got a Q&A tab on the second there, and you can leave your questions. Or in the regular chat, it's all good, and we'll answer them at the very end. So I'm going to turn it over to Kelly. I'll just put your presentation on the screen here, and it's up.
Thank you so much, Scott. I am not in my basement, and the reason being is that it's pretty hard to come by a basement here in Florida. I'm sure they exist somewhere, but very hard to come by. So thank you so much for having me. I'm going to dive right in because I do have a lot to cover, but I'm going to try to cover it in just a few minutes so we have time for Q&A at the end. I can hear maybe your background, Scott, if you could just put it on mute or someone, and maybe that will cut down on that feedback. But otherwise, hopefully everyone can hear me. So a little bit about MoneyCorp to get started. We're actually a UK-based firm, but we do have offices around the world. We have been dealing in the foreign currency exchange business since the late 70s. Last year, we traded about $90 billion in foreign currencies, and that was in over 120 different currency pairs. I say there's few industries that are as regulated as the foreign currency exchange industry. So rest assured that you're working with a company here that has obviously decades of experience, and we take compliance and regulatory compliance very seriously. We do have 11 offices in 11 countries. You'll see there's a very big concentration of us throughout North America, as well as throughout Europe and the UK, as well as Brazil. But again, we can trade 120 different currencies. So it does not matter really where you are or what currencies you require. We can do transactions in both directions. I would love to invite you to visit moneycorp.com. Even at the conclusion of this presentation, there's just some great information there. You can open an account directly from the website if you choose to do that. But if you really want to, dig into the currency exchange markets, there's some interesting articles, blogs. There's a currency zone. You can register to receive a daily, a weekly, a monthly FX update. So feel free to register for those if that's something that you're interested in. There's also overseas property guides. We speak to a lot of people that are kind of getting their ducks in a row and creating their to-do list. Feel free to download these overseas property guides and just make sure that you are actually ticking the boxes so there's no surprises as you do get closer and closer to your overseas property purchase. My presentation today is going to be very focused on buying real estate, obviously, but I did just want to mention quickly that people use MoneyCorp services for lots and lots of different things. We have many clients that are, of course, buying and selling real estate, but also receiving inheritance, selling international shares, sending children to study abroad, destination weddings. That's always fun. But anytime there's a currency exchange and international payment requirement, that is something that MoneyCorp can help with. The number one question I'm always asked is, why would I use MoneyCorp versus my bank? And there's a lot of reasons why. So first and foremost, there's something known as the interbank rate of exchange. That's the exchange rate that big banks are buying and selling billions of dollars of currency at any moment in time. But that's not the exchange rate that you or myself would have access to. Now, because MoneyCorp does $90 billion worth of foreign transactions each year, we have access to that same rate of exchange. So whereas banks are typically taking a margin or a spread of anywhere from, we'll call it 2 to 5%, MoneyCorp is working off of a less than 1% margin. I will tell you that Canadian banks are actually not quite as bad as some other global banks. As an example, you would never use a US financial institution to do an international transfer. US banks, when we're talking about margins, you're looking more at 3 at the very best, if not 5, 7. And we've even had clients tell us that their US banks were taking a 10% margin on their transactions. Canadian banks tend to stick more to that 2 to 3% margin. And again, MoneyCorp is working on a less than 1% margin, getting you really, really close to the true and actual rate of exchange. Banks also charge international transfer fees. This isn't going to break the bank at the end of the day, but hey, if it's $50 that you can save, it's $50 that you can save, especially if you get to a point where you're making ongoing regular transfers. The $50 can certainly add up. With MoneyCorp, you will never pay an international transfer fee. And actually, we have local Canadian dollar bank accounts. So effectively, you'd be able to move your Canadian dollars into your MoneyCorp account domestically. We would facilitate the exchange into dollars and then simply have those dollars sent to wherever you instruct us to send them to. The last thing I want to really mention is that with the banks, you simply have to contact them on the day you want to do a transaction, and you get the rate of exchange that they're able to get you on that day. We have a much more proactive approach to this, and it's more of a consultative approach where we want to start working with you as early on in this process as possible to help you monitor the exchange rate. Let's help you pinpoint the best time to exchange the funds at the best possible exchange rate within the time frame that you're working with. Your currency exchange specialist can help you target a specific rate of exchange. And even if that rate becomes available for a moment in time, we can help you to proactively take advantage of that. Or if we see the rate start to move in a positive direction for you, you could even go ahead and purchase your US dollars and simply hold those on your MoneyCorp account until you're ready to make a transfer in the future. Every client that opens an account with MoneyCorp, we immediately introduce you to a dedicated currency exchange specialist. So again, this is someone that is always going to be on hand to provide you with exact quotes and expert guidance along the way. Again, to set up an account, all Canadian clients do need to provide us with 2 documents. Don't be alarmed though, it's a copy of a photo ID and a copy of a utility bill or something showing your name and your current home address. So very, very simple. And once that account is set up, you can go ahead and speak to your currency dealer. When you're ready, agree the exchange rate. Again, fund your MoneyCorp account in Canadian dollars and tell us where to send the US dollars. Bearing in mind, MoneyCorp can send the funds directly to the title company or the lawyer or your personal bank account if you have a US dollar account set up. Or again, you can simply maintain a balance in US dollars, and as and when you need them, instruct MoneyCorp to make those payments on your behalf. So just wanted to show you quickly a couple of examples. I did use some pretty significant numbers here. So this is Jane. Jane is from Canada. She's buying a property in the USA for $400,000. And what I wanted to kind of show you is just the difference, right? So the bank was offering Jane an exchange rate of 0.7105, meaning that $400,000 property is going to cost Jane 562,983 CAD. Simultaneously, MoneyCorp was providing an exchange rate of 0.7298. So same property, same purchase price, but with MoneyCorp, that property was going to cost 548,095 Canadian dollars. So it's a difference of 14,000 Canadian dollars just because Jane used MoneyCorp versus the bank. Again, we want to help you target a rate and help you to make an educated decision on when to buy those dollars to maximize your bang for your buck. Again, local Canadian account. So let's strip the international component out of this entirely. And we can provide you with statements, transfer confirmations, and updates along the way. Sometimes the title company will ask you for a wire transfer confirmation. By default, that is already going to be in your inbox and ready for you to share with them. Next, just for fun, France was on my mind. And I just wanted to kind of highlight again that, yes, we're talking about buying property in the US, but we are seeing more and more Americans and Canadians look to go to Europe. So I just wanted to show you a brief comparison here to make you understand that MoneyCorp can do anything related to currency exchange. Same comparison. You've got the bank doing Canadian dollar to euros at 0.6274 and at MoneyCorp 0.6350. So again, a big savings when using MoneyCorp versus a Canadian bank. We are obviously often asked what factors influence an exchange rate, and really there are so many factors we can't even count them at this point. I think what I'm about to have for dinner is probably something that may not impact the exchange rate, but just about anything else. So you've got political stability, interest rates, stock markets, inflation, the list goes on and on. So these are the factors that your currency specialist will be keeping their finger on, and therefore passing this data onto you to help you make an informed decision. Again, just going back to the fact that you can register to receive some daily market information dependent on how much you want to dive into understanding how the currency exchange markets work. And last but not least, I wanted to leave you with my contact information. Feel free to take a picture, save it. That is my cell phone number there. Happy to have a discussion with you up front so that we can talk about if setting up a MoneyCorp account for yourself is right for you. We can set up accounts both for private individuals. You can have a joint account with MoneyCorp, or we can set up the account under the name of a corporation if that's what you need to do as well. So I look forward to answering any questions that anybody might have. And again, feel free to get in contact with me in the days and weeks ahead. Thank you.
Kelly, there's a question or a statement in the chat, so I'm just wondering. So JJ Rental Holdings, and I know who this is, but I won't say your first name for confidentiality on here. But he transferred money today with TD, and the exchange rate was 1.43 Canadian to $1 US. Just for fun, would you be able to check that and see what the comparison is for today?
I wouldn't actually, not on the spot right here. I'm not a currency exchange specialist, and our currency dealers are the ones that have access to the live rates of exchange. It's 8:30 at night right now, and I don't have a currency dealer on hand to provide that information. So I will say also, it isn't a daily exchange rate. The rate fluctuates constantly. We work off of the live rate of exchange. So I would need to know the exact time that you did that transaction in order to accurately compare apples to apples. But I would highly suggest setting up an account with MoneyCorp, comparing the rates, and by all means using the one that's going to provide you with the most beneficial exchange rate when you're ready to do your next transaction. There's no cost to set up an account with MoneyCorp, and there's no minimum deposit needed. So have the discussion with your dealer and determine if we can get you a better rate of exchange on your future transfers.
Perfect. And JJ Rental Holdings is saying, do they have rate lock options?
We can do two things. One, we can do a forward contract, or one, let me back up. We can pre-purchase your currency, right? So you can go ahead and buy your currency right now and leave it there. And therefore, effectively, you were locked into the rate because you pre-purchased your currency at today's exchange rate, as an example. And then you can leave your funds in US dollars for a future date. We do have a forward contract. Our forward contract allows you to lock into an exchange rate for up to 2 years. With our forward contract, you would be required to send in a 10% deposit to offset the total amount that you were looking to transact. I will be honest, though, there are some limitations with Canadian clients taking advantage of a forward contract that aren't necessarily the case for clients in some other jurisdictions. So again, you'll want to discuss with your currency dealer if a forward contract is available based on your residency.
Awesome. Thank you, Kelly. And I'm thinking this is a good idea for anybody that wants to even take their positive cash flow from the States and pay it to themselves in Canada, right? Because even if it's $50 that you might save, it's still $50 then.
Absolutely. We have lots of people that have the property managers, et cetera, send their rental income payments back into their MoneyCorp account. You can then hold them in dollars. Hopefully you convert them back to Canadian dollars and, use them as you wish. Or of course, if you come up with expenses in the US that require you to make payments back to do something else, then MoneyCorp can do that US dollar out, US dollar payment for you.
Super cool. And I have another question, and then obviously we'll hold questions at the end, but we'll turn it to Erwin in a second. But do you have a minimum that you can transfer, right? So if somebody does want to transfer their cash flow, what does that look like?
It's $250. So it's a pretty small amount. So there is no maximum, but there is a minimum of $250.
Okay. That's awesome. Thank you so much, Kelly. And again, we'll hold questions at the end. So if anybody ends up having any question that wasn't asked, we can do that. So right now I'm putting up Erwin's presentation. So I'll turn it over to you, Erwin, to touch on how Share is the easiest way to own U.S. rental homes.
Thank you, Scott. Thank you, Kelly. You hear me okay? Everyone hears me okay? Fantastic.
Yes, sir.
All right. So we're actually going to now talk about how to actually make money because you make money by actually doing deals, buying real estate, holding it for the long term. All right, so let's get into it. Assuming my slides move. Okay, so Share, I am something like the 7th person to join Share. Even though we are a US company, most of our executive and staff are Canadians. Our CEO, for example, Andrew, he owns 20 income properties, and he is a 2-time tech founder from Silicon Valley. He's originally from Brampton, and he has returned to Brampton. But fun fact about Andrew, and this is what partly got me involved into this company as well, is he owns 20 properties in the USA. He has not seen any of them before, and he cash flows $10,000 US per month. That's more than anyone I know personally without an enormous portfolio. And then the chief investment officer is Dimitri. He was formerly executive director at Starlight Investments. For all you Canadians on here, you may have heard of Starlight. They are the largest apartment building owner in Canada. And then when they were facing challenges and growing in Canada, they started expanding to the States, and that's where Dimitri came in. Dimitri was responsible for managing a portfolio of $7 billion, mostly in Sunbelt USA. So that's somewhere around 20,000 apartment building units. So Dimitri knows more about real estate investing than anyone I know personally. And for a Canadian, he is probably within the top 5 Canadians in terms of exposure to U.S. real estate, in terms of both volume and dollars. Our chief financial officer is Carmen, who is ex Big Four accounting firm tax specialist. She herself owns over 50 properties in the States and has not seen any of them before. She is one of the most successful first-generation real estate investors I've ever met. Brandon's a tech guy, and then there's me on the right. For those who don't know me, I've been working with Scott for over a decade. Scott has been getting myself and my clients mortgages back when he was working for that big bank that starts with a C and ends with a C that we will not name. So for my real estate background, I've had personal interests in at least 40 properties. As a realtor and a team leader of a realtor team, we've transacted on close to $500 million worth of income properties. Proudly, no new construction condos. Scott can vouch for that. We never had to ask him to try to underwrite a pre-construction condo for any of our clients. And as such, I have about 45 clients at least who've made $1 million or more in the income properties we've helped them transact on. So that's just a bit about me. Some people know me from my podcast that I've been doing since 2016 called The Truth About Real Estate Investing. So I want to touch on a couple things. So my experience in real estate has been largely in small residential versus I know lots of people are interested in multifamily residential. And I just want to talk about the benefits of single family. Now, first of all, before you even start off, if you want single family or multifamily, I think most people should consider who they want as their tenant profile. My experience and what I taught all my clients as well. I've had over 300 clients. What I usually taught them was that we generally want middle income and above, right? So then when you think about where middle income people and above want to live, they generally don't want to live in high density unless they have to. In cases where they have to would be like more expensive cities like Seattle, New York City, Los Angeles, Miami. But when we're real estate investing in the States, first off, I think Canadians need to really understand how different the US markets are than Canada. The Americans have, I don't even know how many, but 4 dozen, I think. Maybe even Kelly knows. I think the Americans have at least over 50 cities with 2 million population or more, versus in Canada, we only have 3. And one of them speaks French. So it's awesome. So apologies. I love Quebec. I love Montreal. However, most people who don't speak French don't want to end up in Quebec. Right? My point, though, is that when we're investing in the States, we're generally investing, again, we're looking for quality, right? We're looking for both quality of tenant and property, and also opportunity. Best opportunities in the States right now are generally areas in what are considered red states. This isn't political, but this is more economical. Where is all the economic growth? Where is all the investment happening? Generally, it's in the red states. And so our strategy has been around emerging markets. So we're generally higher end, but also consider higher end, and I'll have a slide for that later. The most my clients ever paid for a 3-bedroom house detached in the States is $275, right? So we're getting better quality tenants in single family rentals than you can get in multifamily. It's, again, if you can afford to live in a detached home, and that's what most people want in general, including Americans. Like, Kelly, do you live in a detached home? You even mentioned you don't have a basement. You're that rich. You don't have a basement, right?
Correct. I'm in a detached home.
Yes. And I don't, yeah. Again, if you don't believe me, make more trips to the States and go have a look at multifamilies, and then look at renters who live in detached homes. There's a difference in the tenant quality. So with houses, the tenants stay longer. I also understand that investing in the States is really different than Canada. In the States, people want tenants to stay as long as possible so that there's no vacancy, there's no turnover costs. Appreciation generally is better in single family homes because we're not tied to necessarily net operating income and cap rates. Exit flexibility. In small residential, again, I have a lot of experience in small residential. Liquidity is higher. The most liquid piece of real estate is the starter home, right? What is the most in-demand piece of real estate? Generally, that is the starter home, and that usually means 3-bedroom and detached, right? If you don't believe me, ask any apartment building investor in Canada, especially if they're in BC or Ontario, if they can sell their property. I know many people in this space, and they cannot sell. If you have a 3-bedroom detached home anywhere near the GTA or surrounding Montreal or Vancouver area or Edmonton or Calgary, that property probably sells within 60 days quite easily, right? Financing options. financing is just so much easier on single family homes than it is for multifamily. Also, for any beginner investors on here, Scott can vouch for this. If you are a beginner investor, the lenders generally want to see you do a smaller multi before you can do anything larger. So be wary of that as well. Market access. Again, it's and then for the strategy as well, we're generally looking to be in nicer areas. So in any major city that we're in, again, we're generally around major cities you've all heard of, cities with major sports teams. We're generally investing somewhere around 30 minutes from the downtown. We want to be in the suburbs where families want to live, right? If any of you have been in any of these major US cities at night, and if you're a Canadian, you'll notice there's a very different vibe. So you understand completely why we're in the suburbs. All right. So just to give you an idea of what kind of properties we're dealing with, we're generally dealing with price points between, our clients are generally transacting between 100,000 to 275. I haven't seen a single client buy a property for over 275. We're in landlord-friendly states. I know that image highlights California, but we're generally in, again, we're in areas that you've all heard of. We're in Arizona, we're in Texas, we're in Georgia, we're in North and South Carolina, we're in Missouri, we're in Kansas State, we're in Ohio a little bit. So again, all landlord-friendly states that happen to also be business-friendly. And because they are business-friendly, these states generally attract more investment, and also they have lower taxes. So surprise, surprise. And then stronger economics. I have some more slides on that. I was just talking to a friend how, the decline of Canada started around 2008. In 2008, we were leading the G7 countries. We were including leading America because we have such a strong banking system. Well, that didn't last very long. We are now dead last. We're actually negative growth right now. We're worse than Italy in terms of economic growth. While the Americans, I know this just shows the G7, the US economy is basically leaving behind everyone else in the world. The only ones really keeping up are maybe China, right? And then I belong to a brokerage called Rockstar Real Estate. Even they're saying, who wants to invest in Canada? Because based on the capital markets, money is just regularly leaving Canada. And even our own companies. In the bottom right there, you see TC Energy is a company I actually own the stock in. Where's my mouse? There it is. So TC Energy, again, a Canadian company, just announced they're investing $8.5 billion in the States, not in Canada, right? They'd love to invest in Canada. They said so, but the system here isn't conducive to them investing here. Don't forget our Prime Minister, who was leader of the current party that's in power, said there is no business case for additional energy investment in Canada. So makes sense that energy companies in Canada would go invest elsewhere, especially somewhere like the States, who's trying to grow their energy sector. Now, institutions, so understand, if you study what's going on in the investing world, if you read the newspaper, if you read the news, I read the news regularly. If you see what the really big money is doing, they are generally investing in the States, including Canadian companies. Here's this one article saying that institutions are set to own 40% of single-family rental homes in the US. Understand that the single-family rental home market in the industry in the States is $2.4 trillion, I believe. Don't quote me on the number, but it is the 2 trillion number. And to give you context, that is larger than the entire Canadian economy. Let me say that again. The single-family home rental market in the US is bigger than the Canadian economy. That's how big it is. Again, large money is pursuing investing in the States. Canada Pension Plan just announced an additional $700 million to invest in the Atlanta, Georgia area, a very popular area for our own clients as well. And also Blackstone they bought just last year, they paid $3.5 billion for Tricon. Tricon is a Canadian company. Was a Canadian company listed on the Toronto Stock Exchange. They owned 36,000 single-family rental homes in the States. So again, this is a massive, massive industry. Okay, and if you're here, you probably already know these numbers. You're probably here also because you find that numbers in Canada don't really make sense. average home in Canada is 723,000. Kelly, that is real. I know it's Canadian dollars, it's inflated, but yeah, that is the cost of an average home in in Canada. And for 723, that gets you like a 2-bedroom condo in Toronto. The funny thing is that this price probably also gets you a 2-bedroom condo in Miami, but I think I'd rather live in Miami. The rents so both of these numbers are incredibly unaffordable, but also the rent yield from an investor standpoint, these numbers are terrible. So that's just how messed up our numbers are. The properties, both rent and price, are unaffordable, and the rents still don't even make sense for an investor to get into it. Flight of capital, we already discussed this. Canadians are the number 2 buyer of U.S. residential real estate, right? Now, for anyone who's a brand new investor, take a screen capture of this. Do-it-yourself real estate investing. These are the steps, right? Understand this is quite challenging thing to do. And that's why my team and I used to get paid a lot of money to coach clients, because we basically coach clients through all of these processes, right? Again, when we were coaching clients to acquire income properties in mainly west of Toronto area, we were helping them do all these things, right? And it also takes a lot of time. Some of my clients would take 2 years to transact on their first income property. Point is, it's not easy. There's lots of steps to do it yourself, and also it's absolutely fraught with risk. You probably all know people who've messed up, bought the wrong property in the wrong area, rented to the wrong person. I literally just spoke to a client this week who had a tenant not pay them for 9 months and also trash the property. Very nice to be a landlord. Very good to be a landlord in tenant-friendly Ontario. Versus, now I just want to highlight something. Some people mistakenly think that Share is turnkey. More accurately, we are a done-for-you service. It's actually Scott that coined the term. He was actually the first one that accurately, I thought, described what Share does for clients, as in that we are an end-to-end service. Our investors have minimal involvement in the process. It's mostly just pushing paper, right? No different than getting a mortgage in the States, right, Scott? It's just pushing paper. There's no significant effort. Properties qualify for the mortgage. I don't have to show Scott five of my corporate filings because that's how many corporations I have. Scott hates my guts. Mortgage brokers hate my guts in Ontario because our financing situation is so complicated, and also the rules are here just not conducive to real estate investors scaling. Control. Our clients they don't have to have any control, but they own 100% of the property, right? So again, so turnkey. Most people at turnkey think turnkey is like the best way to invest. Again, I feel when you do more advanced strategies, which we do regularly, for example, if you speak to any advanced real estate investor, they want to make money on the buy. So I actually have a line for that. Equity gain on purchase. This sounds much more formal. It's the formal way of saying, I want to make money on the buy, right? When you do turnkey, there's generally little money to be made on the buy, right? Versus when you do it with Share, what happens all the time. Scott can vouch for us because he actually sees the appraisals. When Scott sees a Share deal come across his desk and he's got to go get the appraisal, it's always higher than what our client paid for the property. So our client consistently makes money on the buy, right? So basically the outcome is that this is the wealth. If you want to build wealth quickly and easily, I haven't seen an easier way to do so than Share. And I've been around for a long time and I have the gray hair to prove it, right? So what does done for you look like with US real estate investing? So we start off with interviewing our clients to understand what it is they want, right? And it's called a buy box. So our clients clarify for us what their investment goals are, if they have any preferences on where particularly, and also if they have particular strategies they want. Really popular strategy for our clients these days is subject to. There's probably not time to get into it today, but we are doing a fair number subject to. For anyone here who spent a lot of time on YouTube on US investing, you know that subject to is pretty much what all the honestly do-it-yourself investors are doing in the States. And here at Share, we actually do it for clients, which basically means that we are helping our clients purchase properties where the seller becomes the tenant, and also we take over their mortgage. So then we're paying historically low mortgage rates, and also we have no vacancy up front because the seller is staying as our tenant. Is there a better strategy out there? If you've seen one, I'd love to see it. So this is like, for most of you on here who are Canadian and understand what a BRRRR is, this is even better. This is still a BRRRR, but we're getting even better terms, because again, we're taking over someone's historically low interest rate on their mortgage, and still typically having 25 more years on it. Financing strategy. So this is where LendCity comes in, and again, all my clients are Canadians. So the lovely thing about LendCity is they can help them both on the Canadian side and the US side. One-stop shop. Who can beat that? At Share, we do help our clients with their tax and entity structures as well. Our CFO, our CFO, Carmen, is a cross-border accountant, very familiar with this area. And also LendCity has, Scott, you already have existing entities for anyone who wants to do it that way as well. Whatever a client wants, we can help them. Search and acquisition. This is where Share really shines. It's actually rare for us to do anything on market. So for most of you real estate investors who've been around for a while and have done education or coaching, I'm sure most of you want to be doing transactions off market, and that's where the 90% of our transactions are done. We are actually doing off market deals. We have relationships with builders and wholesalers. So yeah, we're doing the most, and then they bring the deal to Share, and then within Share, we know what our clients are looking for. So when we present a property to our client, it's because it fits what their investment criteria, what we call a buy box, right? So also understand we are a tech company. So anything that's digitally available, such as if it's on Zillow or Realtor.com, our IT systems are actually scraping all that data to see if any of those properties fit your criteria. So there's no need for you to go to Realtor or Zillow, anything like that, and say, hey, Erwin, do you think this property is any good? Understand we've already reviewed it and checked it against your criteria. Closing and onboarding. So Share coordinates the due diligence process, property manager inspector, contractor inspection, a home inspection. Even my property had a termite inspection as well. We coordinate all of that, and we facilitate closing for our clients. Easy peasy. And then end of the day, almost all of you on this call are Canadian. You don't have to leave home to be a real estate investor in the US. It is, again, the easiest way I've ever seen it. So again, Share is a platform. We are a technology company. We make investing almost as easy as owning a stock, right? For example, none of our clients have seen their properties in person. Again, you can invest remotely from home so that you can spend more time doing what's important to you. That can be work, that could be your work, your business, or spending more time with your family. You can monitor everything from home. Some of this looks like this is our client portal as well. All your documents are managed in one place. All your financials are in one place. So you can track your property and your cash flow all in one place. And then the nice thing about us being a tech company and everything being done in such scale, all your financials are digital, including your expenses and receipts and whatnot. So your bookkeeping is done for you. Now, in my experience, 8 out of 10 real estate investors in Canada do their own bookkeeping. Here, I'm telling you, your bookkeeping is done for you. All you need to do is download the file and give it to your accountant. So who this works for? This works for people, pretty much anyone, right? If anyone wants to be a real estate investor, we generally tell people if you have about 80,000 American, 100,000 Canadian, that is enough to comfortably get into your first income property. Now we're talking about diversification as well. In my experience, most Canadian investors are already, all of their income and all their assets are in one country. Now, I like to pose the question. I'll pose the question to all of you. What financial advisor in the world would recommend that you have all of your income and all your assets in one country, right? I can't see Kelly clearly right now, but I'm pretty sure she's shaking her head that you should have all of your eggs in one basket, right? Kelly, am I right?
You're right. Don't
Send
have
your
all
money
your
out.
eggs in one basket.
Yes. Open an account, get some euros, get some. No, I'm kidding. But again, it's what I see every day when I talk to Canadian investors. Almost all their income streams and all their assets are in one place. And also our neighbor to the south is the world global mega power. and their currency is the world reserve. And if you want to take this argument offline that they'll never be the world reserve, I'd gladly have that conversation with you. Hands-off investment. So we are not for the do-it-yourselfer. We're not here to help people source deals or whatnot. We're an asset manager. That's how we make our money. We get paid monthly asset management fees. We also get paid for acquisition fees. But that's it. So if you want to do your research, like I did, go ahead and compare us to a REIT. Because that's essentially what we are. That's what asset managers are. They're essentially like REITs. But REITs that you and I can invest in publicly, they take significant equity and performance pay. We do not at Share. We take smaller than market fees for everything that we do. So when I was listening to this for the first time, I was like, this is too good to be true. I need to get involved. I need to get my own property. Here's some quick case studies. This is my client, Shane. He was a guest on my podcast as well. So he said this all on my podcast. So you can hear it from him directly if you'd like to hear it. So Shane is a mechanic from Montreal. When we found him, he had $100,000 in savings. He had never owned an income property before in his life. Again, he lives in Montreal. Apologies to the folks from Quebec. Quebec tenant laws are pretty harsh. So he didn't want any part of that. He instead invested in a property in Memphis, Tennessee via Share. He didn't know much about the US. He didn't know where he was going to invest, but he knew the importance of having real estate in his portfolio, and he did not want more headaches in his life. We at Share, we helped him create his US entities. We helped him with his financing. Scott, you have his financing, don't you?
Yeah, we did it. I didn't want to interrupt you, but yeah, we did it.
Thank you, Scott. So we helped him with an off-market opportunity in Memphis, Tennessee. And both opportunities were. I actually think I have slides for both. So this property, he bought it in February 2024. We bought this house for $90,000 US, $9,000 renovation, rented it for $1,200. That's a 14.5% rental yield. This is an 1,100 square foot house, again in Memphis, Tennessee. And then we refinanced it. Scott had it appraised for $157,000. So remember we talked about making money on the buy? Shane made money on the buy. A very substantial amount of money for not a very big property. With the refinance, he had $84,000. He was able to take out $84,000, and he was able to roll that into another property. Specifically this one here in Kansas City, Missouri. So I'm a big fan of this property because of the price point. It's a large one, also about 1,100 square feet. Kansas City, Missouri. Kansas City is wonderful economic fundamentals as a city. And also I love the fact that this property was already renovated and already had a tenant. Rents out for $1,400. It's a 9% rental yield. Yeah. Try to find these kind of numbers in Canada. If you can find these numbers in Canada, please let me know. I will feature you on my podcast. And the funny thing is, I've made that challenge many times. No one's taken me up on the offer. All right. So yeah, $84,000 in proceeds, $74,000 to close on the second property. Right. So he still was able to repocket $10,000, get $10,000 back into his pocket. Now I mentioned, Derek, here's another one. Here's my friend Derek from Ancaster. The funny thing about people from Hamilton, and people from Hamilton on here will say the same thing. Anyone from Hamilton is not from Hamilton. Derek's from Ancaster. That's what they say. I had a call today with the gentleman from Stony Creek. I'm like, oh yeah, you're from Stony Creek. You're not from Hamilton. I get it. So Derek bought this is a brand new house, $176,000. I think it was about 1,400 square feet. No, there it is. 1,250 square feet, 3-bedroom, 2-bath, brand new house. The renovation, so understand the Americans are a little bit different than in Canada. At least they're different than what I'm used to in Ontario. They don't have appliances, so you have to go get your own appliances. So a lot of this renovation budget was just to buy new appliances, because again, this was a new home, didn't have washer, dryer, dishwasher, stove, microwave, fridge. Those are the things. Monthly rent $1,425, and the rental yield is almost 10%. Again, find me a brand new house for $176,000 US in Canada. That's the inside. That's what the pictures of the inside look like. Gorgeous house. Oh yeah, this is Little Rock, Arkansas. Arkansas is famous among the real estate community because if you don't pay rent, you can actually be charged criminally. I don't know if it actually has ever happened, but the law does state you can be charged criminally for not paying rent. This is a 6%. This is almost a 6 cap rate. So again, please out there, find me something brand new that you can get at almost a 6 cap. In accounting terms, that would be profit margin. Again, this is a new build. Terrace, who's my friend from Toronto, he bought this house in Houston, just outside Houston, Texas, just north of it, $244,000, rents for $2,200. This was a subject to seller leaseback. So that's why he was able to get a 3.9 mortgage, and he still has a lot of years left on it. I'm just trying to do some quick math. 27 years or something like that. He's got a lot more time left on his mortgage. Again, this is a historically low interest rate for a mortgage. And so he only needed to come out of pocket $90,000 US to close on this property. Right? So this is what we consider a B+ property, but he paid a C- price for it. Again, he made money on the buy, is what I'm saying. The lease signed a 2-year lease back. Sorry, my wife's yelling at my kids right now, so I'm kind of distracted. And also the tenant also prepaid $12,000 on closing. So again, this is why we really like this strategy, because again, historically low interest rate. My client has cash up front. He has massive security as a landlord in this situation. Again, this is Texas, so this is incredibly landlord friendly. 5.1% cap rate. I actually think it's higher before the renovation, but let's go with 5.1. So again, if anyone's interested in learning more about Share, and we have a ton of free resources as well. We even have a complete guide on how to buy U.S. income properties. I know literally people in our community sell the exact same course for like $200 to $700 for a course. We offer the guide for free on our website as a downloadable. So you can just zap that there. ShareSFR.com is the URL, or you can take a picture of the QR code. On our website, you always find exclusive off-market deals, right? And again, and if you click on the property, you'll see the full underwriting of that property as well. So if you like numbers, if you're a technical person, we have an abnormal number of engineers as clients. Engineers seem to love our offerings, and so if you like numbers, and especially if you like quality underwriting, then you'll enjoy our website. So if you get a free account, again, all of these sample properties on the website will have full underwriting, ultra conservative. It's a complete no-brainer when you look at the numbers that are available in the USA versus, and not just available in the USA, numbers my Canadian clients are doing today versus what people are doing, what's available in Canada. I don't see much opportunity in Canada. And once you've had gone on a deep dive in the States, you can't unsee what you've seen. And I don't see much of an investment case to invest in Canada ever again for the lazy investor. I'm a lazy investor. I'd much rather spend more time with my kids who are getting yelled at by my wife right now than doing landlord functions. So invest from home. It's great to be a U.S. real estate investor. It's great to have U.S. cash flow. Go America. All right. So for more information, there it is. Again, the same QR code. So that's it from me, and I'll take questions.
That's awesome, Erwin. Yeah, so in the Q&A, I pinned a couple. So you go to the chat and then Q&A tab. But we have a question for Kelly. The first question, it says, from JJ Rental Holdings, it says, is there any transfer fee for transfers that are low amounts?
No, there's never a transfer fee from MoneyCorp, regardless of the amount.
Awesome. Thank you, Kelly.
Mm-hmm.
So Mish is saying for Erwin, can you remind Mish of the fees and services that Share does and provides if she likes one of the listings?
So the fees are so every property listing on our site, and every time we send a deal to our client, our fees are fully there. They're completely transparent. Our acquisition fee is $7,500 US or 3%, whichever's higher. That's acquisition fee. That's one time. Our ongoing asset management fee, it slides. For our clients with more properties, it becomes a smaller percentage. On the first property, our asset management fees work out to somewhere between 4 and 6% of rent, right? And also with the advancement in technology, that number is actually falling. So I hope everyone likes AI because it's making being a landlord more profitable.
That's awesome. Mish has another question. It says, with Share, does the buyer find the property manager or does Share do that?
So we're end to end. Our property managers are institutional. They're enormous. The smallest property manager we work with will have somewhere around 3,000 houses under management in the city. And as in turn, they have somewhere around 200 in-house staff. They don't want retail clients. They don't want clients like Scott or I. They probably they'll take Kelly though, because she's big time. But generally they're not working with folks. They're not working with investors unless they have 100 to 300 houses. So that's not Scott or I. So that's why they'll go to Share, because Share is an institutional investor. So the property manager talks to Share talks to me. It's kind of like Costco, right? Kirkland doesn't talk to me. I don't make returns to Kirkland. Costco's my intermediary. So that would be like Share. So again, property management is under the overview of Share. And also understand that when I did my own due diligence, and also most of you will probably cover this as well, that your greatest risk as a U.S. real estate investor is actually the property manager. So that's why I really like the idea that I'm able to outsource them, because the typical turnover for a property manager is somewhere around 2.5 to 3 years. So that's not a function that I enjoy doing, especially being an out of country investor. So I appreciate that I have someone else handling that for me.
Well, that's awesome. And the other thing too that I'll share, no pun intended, is that if you already own real estate and you want in the States and you want to make it more hands-free, Share can install management in their systems and their reporting and all those things on your existing property as well. So I just want to bring that up. Now Dan is asking, probably in reference to the map that you shared in some of the locations you discussed, but Dan's asking, are any other areas opening up, i.e., away from Texas or Arizona? He's interested in Virginia Beach.
We are in, I think, 24 major markets right now, all in red states. So if you're looking for a red state, we can likely support you.
Okay, that's perfect. So I'm going to answer a question for Devin. It's about mortgage financing, but anybody else that's here, if you have any other questions, put them in the chat and then we'll get to them. So Devin has 2 questions. So do we finance multifamily in the States? Yes, we do. If so, what is the maximum unit size? There is no maximum unit size, but you have to keep in mind, if this is your first US purchase and you're trying to buy 73 units, they're going to be like, whoa. Do you know what I mean? Like you have to build up to that. Now, there are exceptions. If you own large multifamily properties in Canada, we can kind of show them your Canadian portfolio and that you have that experience so they move forward. So do keep that in mind, right? To go from zero to hero, right? That's hard. They like the baby steps there. I call it the doubling effect. I don't know what it's actually called, but usually it's pretty. I don't want to say it's easy, but to get under 20 units, you can do without any experience. Okay. They are going to look at the size of the property, like all these different things, because if it's a really small loan too, right, those are troublesome. I think on Irwin's slide, he said the minimum for multifamily is 700 to 800. Loan amounts of 500 or above are the sweet spot for multifamily. So up to 20 is pretty easy to get without experience. Then from there, the doubling effect kicks in, right? So if you're buying 20 today, then tomorrow you can get 40, and then 80, then 160. You see what I mean? So it kind of keeps doubling. But just to jump to something that's really big, that's limited. So then the second part of your question here says, when I say 2 months bank statements for proof of funds, can that be an investment account statement, or does it need to be cash in a bank account? It can be either or. We can even use lines of credits, and we have. As long as you have the funds available, they'll use it. Their version of FinTrack requires 2 months of history for money laundering and fraud. So it can come from many, many sources. I've even had one client use their RSPs. Now they had to cash their RSP, so there was a tax in Canada. So they used the after-tax amount, but I had a client do that, and the lender was okay with it. So it's pretty cool. So there is some more questions here. I'm just going to add them to the Q&A here. So the next one is from Mish. So she says, as a beginning investor, I struggle with what happens to my cash flow if I don't have a huge down payment, and if I want to scale up and refinance since rates are higher in the US. Any wise words on how to overcome these thoughts? So the thing is if you're concerned, right, this is where the underwriting comes into play, where Share adds value, where we can run the numbers. So if the cash flow's tight, we can look at an interest-only loan, or we can look at a 40-year amortization loan, right? So there's different things that we can do for the cash flow. I will say, though, that you're really not going to, at least in this point in time, you're really not going to find cash flowing issues as long as you're not trying to buy super expensive properties, right? Like, it's very rare that I find a property that does not cash flow. We actually have a local doctor in Windsor who's buying Airbnbs in Florida, and the one had a condo fee of like $1,800 a month, and I'm like, wow, this is not going to like.
That's my mortgage payment.
I know, but it's awesome. It includes a golf course. They have DJs at this place every day, gym membership. Like, it's like a lifestyle, right? But it cash flows. Like, it actually cash flows. So really, like, it's hard not to find cash flowing numbers. So again, I think it's a matter of tapping into people like Kelly, right? Because when you're transferring funds back and forth, you can maximize your cash flow by minimizing your currency exchange costs, right? Getting those longer amortizations, shopping around, like we'll shop around for you to try to get the best mortgage. And then also partnering with experts like Share, or if it's in an area they don't cover, an external realtor, and make sure that they find something that cash flows. So there's definitely ways. You just have to be creative. So this one's for you, Irwin. It's from Bruno. He says, what are the fees for bringing a property to Share for management?
Again, it would depend on the size of portfolio. So great question, Bruno. So Scott mentioned earlier that Share offers, if you do bring a portfolio to them, they will asset manage it for you, assuming it's a good fit. So the asset management fees are no different than our other clients. Again, it depends on the size of your portfolio. Roughly, at least for the first property, it's between 4% and 6% of rent. That's where it works out to. But that number slides down if you have a larger portfolio. So Bruno, if you could share the size of the portfolio, I could probably get you a better number. Like if you have like 10 properties or like 5 to 10 properties, you're probably at the lowest end of the scale. which so it'd be it's not much money at all to get rid of a lot of headaches.
Perfect. So I just figured this out. I can add the questions to the stream. So here's the next question from Jim.
That's so cool.
Yeah. It says, can Lend City get loans for Canadians to buy and rehab a property to flip in the States? Yes, we can. The first one's always the hardest because there's the lenders for certain products, especially the flip financing. They want you to have experience. Now, we do have multiple lenders that can move forward on your first flip, but there's not as many as if it was your second flip in additional. So yes, we can. The down payments differ. I'm finding like maybe 75 to 80% of the purchase price gets financed, and then up to 100% of the renovations for your first timer. And then the more that you do, the rates and fees come down and the loan to values increase until you hit that 5 to 10 mark, and then you're getting maximum leverage and financing at these lenders. So great question, Jen. Okay, so Dennis says, if I take on loans in the US, will it affect my stress test for mortgage in Canada? So I'm going to say it depends, Dennis, on who you're working with in Canada, because I'm familiar with the Canadian lenders and banks that want you to report foreign properties on your application. And I also know the ones that don't care, right? So you have two answers here. So depending on your lender, yes, it might be factored, or you deal with a savvy broker who understands this, and we can partner you with the lenders when you buy your primary home here that don't look at your foreign property ownerships. So yes and no, depending. Mish has another question here. So it says, and this is for MoneyCorp. So how long do funds have to be in the MoneyCorp account for a purchase?
There is no period of time that funds have to be in the account with MoneyCorp for purchase. MoneyCorp's had the opportunity of working with many clients that have worked with Share, and we have people that need to make an immediate kind of earnest money deposit, and money comes in and money goes out in 1 to 2 days total. So there isn't an amount of time that you need to have money just sitting with MoneyCorp.
Awesome. Thank you. So far, I mean, that's all the questions. If there are any other questions, now is your time to put them in. And again, of course, book a call with myself or my team to go over the financing. Erwin put up his QR code as well. And you guys have Kelly's contact. And this recording will be sent to everybody at the conclusion of the event too. So if you missed something, you can replay it after. But last chance, any other questions from anybody who's watching?
Oh, no one asked, but what's the score in the Blue Jay game? And it's 6-1 Blue Jays over the Yankees. Go Canada.
Nice. Love it. So Frank is saying, let me put this on the screen here. Frank's saying, what's the minimum to buy a first property? So in Share's qualifications, they mentioned the purchase price minimum is 100. That's actually very, very, very hard to get now. It's tightening up on the smaller loans. Most lenders want it to be like 115 or higher. We could probably still source somebody who does 100. But then at that, right, depending on the lender, most lenders want 30% down. A few will go to 25, right? But usually the ones that do 25 want the loan to be 150 or higher. So you got to just check, right? And that's what the strategy call does, that you book with myself or somebody on the team, because we'll analyze those numbers. So minimum purchase price, depending on the location, let's call it 100, because I'm positive we can still get them done, but it's going to be very tough. But most lenders have shifted to 115, and then you're needing minimum's 25, but let's call it 30 because it's a small loan that you would need. Okay, so Jim, so can Lend City provide a mortgage pre-approval note to present to the realtors in the US when shopping to buy properties? They sometimes ask for that piece of document. 100%. We have our own pre-approval letter. We list the property address, the terms, the LTVs, everything on there. So we can give you that for your realtor. And we've even accepted phone calls from, if you give us permission, of course. But we've had phone calls from the listing agents where we confirmed the pre-approval verbally to them as well to help secure the offer. So we can absolutely do that for you. So Frank, you did ask the question again, but you asked what's the minimum down payment and expenses, right? So minimum down payment is 25 depending on the size of the loan. And let's call the minimum expenses cash to close is 4% in total. Closing costs and everything, broker fees, lender fees.
I just wanted to add that there's some issues with the lower end of housing for anyone who's seen, for anyone who's followed the U.S. government. What's coming out of the White House is the White House wants to spend less on social programs, and that would include Section 8. So that's an area that everyone should be a little bit wary of. For those who are familiar, hence we are in generally B-class properties, B-class neighborhoods. Hence we at Share generally say 100 grand Canadian to get into something a bit more nicer.
Yeah, and that makes sense. And honestly, the reason why is it's different in the States. You can actually look it up. TD America is selling something like, might be wrong on the number, it's somewhere like 14 billion to 16 billion worth of mortgages to Chase. Okay, now in Canada, TD would never sell their debt to RBC. Do you know what I mean? So you imagine you applied with a loan with TD, and then next year you get a mortgage statement from Royal Bank. Do you know what I mean? That doesn't happen here, but in the States it does. They all sell the debt on the back end because maybe they need to be a little bit more liquid or balance their numbers. So everyone's selling the debt, and the small loans, they're not attractive. So I think, Frank, that answered your question. If not, leave a note. Tracy's question is, what are the refinance penalties like for equity takeout if needed? Using Shane's example from the demo. So Shane actually purchased cash on the first deal. Then we refinanced.
He had 100 grand cash in savings. So he bought the house cash.
Yeah, but let's pretend there's a mortgage. So it depends on the lender. There's a 5, 4, 3, 2, 1 step down. So in year 1, they charge 5% of the loan. Year 2, they charge 4%, right? And then 3, 2, 1, and then 0 after that. No matter what, after that it's open. We have lenders that have a 3, 3, 3, 2, 1. So the first 3 years you're paying the 3% fee, then it goes to 2 to 1 and 0. There's also where you can customize it. So say you know that you want to refinance after 2 years, you'll do what's called the prepay period of 2 years. So within the 2 years, there's the penalty, but after that, it's open. So you can actually pick when you want it to be open. You can actually have it open from day 1. But what's going to happen is your interest rate is a little bit higher, right, for that. Usually a fully open loan is a 1% higher rate, minimum 1% higher. So you can customize that in the States, which I really, really like. So great questions, everybody. So Jimmy says Mr. Cooper Loans was just bought by Rocket Mortgage. And then it says by Frank here, do we speak to Erwin or you first? That's subjective. It doesn't matter in this case. Who you want to speak to first will be integrated along the way. So we can help or reach out to Erwin's team first, because some people, they want to find the property first, and some people I find want to have their finances lined up first, right? So it just depends on who you are, but both ways will lead you in the same direction. So you're good.
Yeah, I understand that we send all of our Canadian clients to Lend City for lending because Scott is quite rare. Investor specialist who handles both US and Canadian financing, and he owns both companies. That's extremely rare. I haven't found another person like Scott.
Yeah, it's rare. And for those listening to, the reason I'm able to is I'm dual citizen. I think that's the secret, right? Is that I was born in the States, moved to Canada when I was young, and I've just stayed here and lived here my whole life. But yeah, so Mish has another question here. So, any strategy on how to scale over the first few years to buy a second or third property? I'm going to say go with share. Because Erwin, he said, and it's true, I'll confirm it, every one of their deals that we've done, the buyer of that property purchased it for quite a bit less than what it appraised for. So you want to scale, right? You buy something under value like that. We can refinance, call it 6 months, call it a year. You pull out that money, right? And then you can do it again. So I do think definitely scaling with Erwin and share will be helpful there. Do you have any feedback to add there, Erwin? I just wanted to confirm what you said in your presentation there.
Yeah, I like Mitch. I don't know where you are located, but here in Ontario, the burr is basically dead. The burr is live and well in the U.S. we can continuously find burr opportunity, right? So that also means, again, the make money on the buy. That should be always something that all investors try to do. Buy for under market value, and then something that you can renovate and improve value, and then extract some of your money back in order to buy the next property.
That's awesome. Yeah.
Mitch, so you know exactly why Shane doesn't invest in Montreal or anywhere in Quebec where he's from.
So I have a political question for you, Erwin, and you, Kelly.
My favorite kind.
Is Alberta going to join the U.S.? What do you guys think?
I'm a former Disney cast member, so I think we'd say like the more the merrier, right? Something very PC like that.
Absolutely. What do you think, Erwin?
I don't think so. I don't think so. Canadians are still very patriotic. They're just really pissed off with how government is going these days.
For
Maybe
sure.
not in our lifetimes.
Yeah, it's just interesting. Okay, so I think that's it. So thank you guys. Everybody's been great from you, Kelly and Erwin, and obviously all the viewers tonight. So we'll get you guys the recording. You can watch that, and then of course, stay tuned for future events. We're going to do more of these, so then you guys can participate and learn together. And always here to help. So looking forward to working with all of you guys, and we'll talk soon.
Thanks, everyone.
Thanks for having
Go Blue
me.
Jays.